We bring our Monday special Midcap Mania, and Nigel D'Souza is here. Auto ancillaries, he says, have got good response in IPOs of late. So today, Nigel, you're focusing on one such auto ancillary. You tell us it's a pure CV play and still, something that's caught your attention.
That's right, Lata. It's absolutely essential for a commercial vehicle. And also, we have observed that there are so many potholes in the country. You can't do much about that besides voting. But you can do something about, something that brings you some kind of comfort. And that is very, very important in terms of the suspension. I'm talking about the leaf spring manufacturer. Lata, you'll ask me that what is a leaf spring? So I've got that picture as well up for you. It should come up for you on the screen. That's precisely what the company Jamna Auto does make. So that's a key ingredient in terms of suspension as well. They produce...
Thing?
Yeah, this thing, Lata. Okay. That's the one we're talking about. That's a conventional one that I've got up for you on the screen. And they produce the parabolic, even conventional as well. Bulk of their sales coming from the conventional product. That's conventional leaf spring as well. Now, why is this company important? Because in the globe, they're third. At a couple of decades ago, they didn't feature at all. But Jamna Auto is the third biggest leaf spring manufacturer in the globe. The others come in from Mexico, Canada. You have a couple of Asian counterparts as well. So Jamna Auto, that's fairly important with a capacity of around 180,000 approximately. But domestically, it's far more important because they have a lion's share. They have 67% share. And I was trying to get the name of the second manufacturer, but it's so small that it's only around 10%. So you have in rank number 1, Jamna Auto with 67% market share, and the other ones are only around 10%. So that's telling you the kind of market share that they have. What's even more important is that their location, their plants are very, very close to all the commercial vehicle plants. I was looking at it, and in Alwar, they have the Ashok Leyland plant. That, in fact, is very, very close. Just take a look at that. In Chennai, you have them close to Ashok Leyland, to Daimler, to Renault, as well as Ford and Isuzu. So they're locationally, they are absolutely fantastic. And that's really giving you the picture. That's where all they're located. That's where all the CV companies are located as well. Now, they've given us some outlook. I was just looking at the last presentation, and 33 seems to be the big number. So they're saying going ahead, they're going to be looking at 33% of their revenues coming from new products. So maybe not moving only towards the conventional product. The parabolic sales as well are likely to pick up. They're looking at new markets as well. So Sri Lanka, Nepal, that could be the target as well. Exports are very, very small as of now. And if you take a look at it, 33% of ROC, they're doing nearly that amount, a little better as well. And also 33% dividend payout is what they're targeting going ahead. This is all on the website, on the BSE exchange as well. But what are the key triggers going ahead? GST, that's going to be a big play. A lot of the unorganized players will be out of the window, so that's going to be one. Secondly, really, the capital expenditure is going to be met out of the cash that's being generated. Currently, they're sitting on some free cash of around 50 to around 60 crores. So that's fairly important. They've come out with a new plant. They're saying going ahead as well in Q3, we're going to be seeing another plant that's coming in there. And I was just looking at it, their debt reduction is something that caught my eye. Just a few years ago, they had around 160 crores of debt in their books. Now, that, in fact, has come down to absolutely zilch. As per the last quarter, I think we should get that plate as well up for you. 2013, it was 160 crores. Now it's absolutely zilch. And finally, financials. Lata, you tracked that very closely. First quarter was very good. I don't know whether they can keep up that kind of momentum. Total income came in higher by around 16%. The margins, just take a look at the expansion over there. They came in at around 13% in comparison to around 16.5%. And profitability at around 27 crores. You try to annualize that, it'll be at around 100 crores. 1,700 crores is the market capitalization. So it's trading at around 17 times approximately. And most of those IPOs that you mentioned at the start of it, they were, in fact, at around 20 to around 22 times. So keep your eye out on the stock. Fairly interesting.
Okay, Nigel, thanks a lot for that. So that's Jamna.